Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bowling with you. Thank you so much for tuning in. I appreciate that. Be sure and like these videos and be sure and subscribe as well so you get notified when we put new updates online, and share these videos with others. Today, I am pleased to welcome aboard Joe Camp of Comstock Investments. We'll talk about the market action that we had on Wednesday, and that included a little bit of volatility, you might say, especially late in the day. And this would be the precursor to USDA's WASDE report that will come out on Thursday. Now, the April edition of WASDE, Joe, you and I have talked about this before. Usually it doesn't seem to have a lot of gunpowder behind it.
Right, the honor most years, but potentially different this time around, just because we've got the focus, as usual, on the April report on South America because of bigger changes that can occur this month. But it's because of the historically wide gap that we still maintain with the USDA above the private trade and the USDA above Brazil's CONAB agency that would make us wonder if we could be in store for some fireworks here. If the USDA can move lower towards these estimates out there, like what we'll see the private trade guests put out there, and then CONAB, which will be out here tomorrow morning before our own report is released, if there's some closure of that gap here in a considerable way, it can really kick off some buying interest that has been maybe more muted as they wait for this. Now, the fear is that the USDA sort of kicks the can down the road towards next month, that these changes are still to come, but they're potentially hidden in these future reports by more important numbers, like for the U.S. balance sheet, because that's a key feature of this report, is that it's our last one in April without the new crop estimates attached to them. That's what we'll get starting in May. So we could have some minor revisions here or there to demand on the U.S. side, but a lot of focus more so on what's going on with Brazil and to a lesser extent, Argentina.
Well, let's go through some of the pre-report estimates. I believe you have them handy here. And let's see what the trade thinks we may get.
Well, you look at the corn estimate for ending stocks left over from the last year, and it's really key to see that range of just below 2 billion bushels to something 2.2, 2.3 billion bushels. The average trade guess around 2.1, up considerably from a year ago. But the point is, back to that range, if for some reason in bullish fashion we end up towards the lower end of that and could slip ending stocks back below 2 billion bushels, that's something that's awfully bullish relative to the sort of overall negativity that we've been talking about, given that that ending stocks number is a big swell from last year. So to see that would require likely that we have a tick up for ethanol and potentially for exports as well. Those demand components, if they move higher by more than anticipated, would elicit a bullish response likely. That's something we think could be more possible after seeing the ethanol report out today, a really strong number there. We should touch on that, again, just to mention why corn futures would be up on a day like this, where otherwise risk off in a lot of markets, lower soybeans, a move lower at the end of the day for Chicago wheat, but still higher settlements for this corn market. Soybeans, a little bit more bearish and expecting that exports could be subject to cut. That would move the carryout estimate up a little bit there. The range is important here too. If we're near the bottom end at 300 million bushels, that's pretty friendly relative to where we've been. If we're up to 350 million bushels or higher, we're still, I think, under the weight of this speculative bearishness that still persists in that market. So watching those demand numbers for some slight changes, which will ultimately influence the U.S. ending stocks. And then again, you can see where we prepared a table for the estimates, a lot of focus on these Brazilian numbers going lower.
Now, before we opened up the trade on Wednesday, there was some economic news that came out that sent the US dollar index, just rocketing higher. And it kind of tanked the equity markets out there. The Dow at one time was down over 500 points during the day. And yet I was amazed that when you have the dollar index going up over 1,000 points, why did Kansas City wheat also rally by double digits. That almost never happens.
Rallying in a way on its own accord, fundamentals related to one, expanding dryness again in the southern plains, that Kansas City crop where we have those futures higher, the hard red wheat potentially deteriorating in condition from here. In a lot of ways, that crop is not going to suffer as much at this point going forward from yield wise, but it can come down from previous estimates and tighten up the balance sheet further than what we're currently predicting. So that's one issue to keep track of. We know as well that the Kansas City market might be more closely related to competition in terms of exports with Russia and how they've been such an anchor for the overall market for so long. Well, there's been some bottoming out in that market as a whole, and also re-injection. It's a broken record, but more and more some concern over some possible disruptions in the Black Sea trade caused by Russia and their attacks on grain assets of Ukraine's around the Black Sea, and lately for this key port of Odessa. So all of that's in the news and causing some further short covering and a little bit of extra bullishness for that market here today.
But that doesn't seem to really jive. You have a 6 to 10 day precip forecast map, and that seems to indicate above normal moisture for about a week and a half out. I'm surprised the wheat market would react as strong as it did today if that's the case here.
Yeah, finally some moisture in the mix for those southern plains states, but some skepticism on that too. This is the way this 2-week outlook, unfortunately, is stacked up so many times over here in recent weeks, is that you get a lot of these systems developing in the west and moving straight north and east, or developing up from the Gulf and going north and east from there, and ultimately missing out on that pocket that's returned a lot drier. We had some abatement of drought that we were really thankful for. It's in part why winter wheat conditions are double as well off as they were a year ago. If you look at that good to excellent rating, I think 56% good to excellent, you see that still we're at risk of missing out on some of these key rains here going forward. But it's a storyline for the market to chew on. It's something that would lend itself to some spreading and some technical type trading in a market that's really otherwise kind of starved for fresh news as we await this crop report and something different.
You shared a DTN corn basis map as well, and I wondered if we bring up that map here to take a look at, what did you notice on there that has shifted?
Well, look at the green spots in western Iowa and how that would indicate positive basis for the old crop at a time when we're talking about this crop report tomorrow and ending stocks above 2 billion bushels. We talk a lot about the farmer still having a lot of old crop supply left to take to the market. But at the end of the day, this is representative of really strong demand. And it is regional because we're focused more so on robust basis values in the western corn belt as opposed to the east. You get into the middle of the corn belt, states like Illinois and Indiana, they're not as worse off as they have been seasonally at this time of the year, but they're not as strong as they are in western Iowa. And I think that has to go back to the ethanol storyline, that data that we got today, a record for this week in the year. We're looking at record corn usage likely, and that reason for the USDA to bump up the ethanol target here for the last crop year. There's a lot to be positive about here. If we look at, like this report again, ethanol production up 10% from a year ago, stocks up only 4%. We're starting to see better demand. We know we're coming into the new summer driving season. We're coming off of a really strong spring break season for motorists. And it's something that when we pair with what's going on too with the oil market, rising crude oil prices, calls for crude oil up to $95 a barrel this summer, a bullishness there really underpinning this processing sector, and ethanol really showing it today. And I think being one of the reasons why we saw corn hold up like it did against that stronger dollar index, against the overall worries like we have in the cattle market. It's a very strong source of demand, this ethanol sector, and I think we can see that in the basis map overall. It's something that can shift further east if we continue to export as well as we are with the river system opening up in a bigger way, the spring season now full on here, and seeing as well as we are doing on corn exports, I think this strong basis is a story that can keep the market overall underpinned again.
A little bit ago, you touched on the cattle market. I wanted to ask you about that. We had a big development late in the day where there was a news story that apparently a Vietnamese student in the United Kingdom came down with H5N1 and actually died within a few hours of becoming sick. And that seemed to send that cattle market into a tailspin before the end of the day. Now, it did bounce just a little bit in the last few moments of trade there, but that has to give people a lot of pause in the cattle trade right now.
Yeah, we need to look into this latest development, but founded or not, this is something that's liable to spook the speculators, as we have seen so many times over the last 2.5 weeks related to this bird flu news, that it's just a reason to step out, to rush for the exit, to try not to be the last one out, and to let the dust settle and go from there. We saw so many times that now this market's been spooked into selling off, but then stabilized rather quickly because of the fundamentals of the cash market holding a lot stronger, even with these big downdrafts these last couple of weeks. Cash market trying to inch $2 or $3 lower, but not falling by as much as we've now seen the board drop. Almost $7 for nearby live cattle last week, over $10.50 for the feeders in May. And that opened such a wide discount where you're talking about now convergence upward, like we had observed in the first few sessions of this week, and an early attempt this morning, but then all of a sudden you fail pretty quickly when you have a news item like that. Again, we're going to have to look into that and wonder what's to come next, and just generally be cautious and think a lot about risk management and how do we go from here short term within a longer term market that we're still optimistic, still friendly for, but an unfortunate bit of news, as you mentioned.
And it seemed like the hog market actually was kind of holding its own, but then it collapsed late in the day as well. Hogs are in a different position, though, when you look at them technically right now, right?
Different technically, but also potentially perceived as a little bit overdone to the upside. It could be the case that any news like this or related sell-off is going to start to trigger some profit taking on those speculators that, like cattle, have been building up now for 2 weeks longer than the cattle, but big positions on the bullish side in that market. Ultimately, for both livestock classes, you look at hogs and cattle futures today, some negativity as well early in the morning from this consumer price index report, where you have an issue with inflation again and some concern about consumer sentiment and potentially some pushback at these relatively higher prices. So it doesn't take much, particularly after the run we've had, both cattle and hogs, over these last several months, where you can see a downdraft and it snowball into something pretty quickly negative like we saw today.
All right. Well, Joe, thanks for the comments. And again, a reminder, the WASDE report will come out at noon Eastern time tomorrow and 11 o'clock Central time. It'll probably be another one of those cases where it'll emphasize the point that the big corporations that can hire a lot of programmers and write all this specific code will get in there and do all this algo trading for about 15 seconds. They'll be in and out thousands of times before anybody else even gets the news. And that always brings me back to the point that I wish they would go back to the old days when they would release the reports before the open, give everybody an equal chance, at trading the news initially after everybody has a chance to digest it. It's just a pet peeve of mine. I would love to hear the comments. If you out there watching want to comment below, I'd be fascinated to hear what you have to think about that idea. Anyway, Joe, thanks again, and we'll catch up with you soon. Joe Camp with us. He is with Comstock Investments. And that'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.